or what you think about your net worth or your economic place in society. Think about your spiritual place in society. The way to enter that realm is by owning Bitcoin, because it carries with it all of those pieces.
Hey guys, welcome to Everyday Finance. The well-known Bitcoin maximalist Max Keiser is of the opinion that we are currently in the midst of a historic financial reset. This reset will bring about a disruption of the conventional wealth structures and bring Bitcoin to the forefront of the spotlight. This is a bold thesis. In 5 years, the price of Bitcoin could increase by a factor of 10, going from $85,000 to $850,000. When it comes to Keiser, this is not just about speculation about prices. Rather, it is about a shift in paradigm. It is his hope that Bitcoin will surpass the total market capitalization of gold, thereby establishing itself as the most valuable store of value in a world that is rapidly becoming more digital. Bitcoin is a digital currency that offers speed, global accessibility, and self-custody without the need for banks or intermediaries. This is in contrast to gold, which is a physical asset that is no longer relevant in this age of digital networks. While many investors are focused on short-term price swings, the real story is in Bitcoin's long-term trajectory as it continues to absorb capital from the traditional assets such as gold and sovereign bonds, according to Keiser's argument. He also claims that Bitcoin is ideally suited for a borderless, digital financial system.
I was at the halving party in El Salvador recently, and I was on stage, and this 9-year-old kid comes up to the stage and says kind of the same question. He says, Max, I'm 9 years old and Bitcoin's already at $90,000, $80,000, $90,000, $100,000. Am I too late for Bitcoin? And I thought about it for a second, and I realized suddenly that actually I'm too early for Bitcoin. I'm too early. And what I mean is that the world that Bitcoin is building will be here after I'm gone. I'm not going to see the Bitcoin world in 20 years from now, 25 years from now. I'll be gone. I will not experience and enjoy the ultimate Bitcoin wealth that's coming because I'll be dead, and I'm too early. What's coming is an absolute repudiation of everything that we don't like about organized religion, organized states, organized money, centralization. We're here in El Salvador. My good friend, Jack Cruz, he's into the whole idea of decentralized medicine, and decentralization is a big theme of Bitcoin. And I believe you talk about the First Amendment a lot, the freedom of speech. Of course, that would be parts of the checks and balances of our federal government to allow for the avoidance of centralization of power, which is what the U.S. is all about initially, to organize itself in ways that don't have tyrants rising up from the constituencies. And so this is what Bitcoin is doing in creating this perfect sense of decentralization. And the world that we're approaching is one where the satisfaction of being part of it is removed from materialism. It's removed from owning a lot of Bitcoin. If you have a lot of Bitcoin, it doesn't really different from someone who has just a little Bitcoin. It's all fuck you money. If you have $10 worth of Bitcoin or a few $1 billion worth of Bitcoin, it's kind of the same thing. Michael Saylor has billions and billions of Bitcoin. He can't affect Bitcoin. He can't change Bitcoin. He has no impact on Bitcoin. He can only kind of join into this group spiritual community as he does more and more. If you notice on his social media feed, he's more and more getting into the spiritual side of Bitcoin, because that's the inevitable path of one who hodls Bitcoin for any length of time, is that you realize that this kind of it gets rid of money in a lot of ways. Money is a very imperfect way to manage a society and to generate signals within a society. And money ultimately is a signal generating mechanism to allow people to communicate across language barriers and geographic barriers. I got my canned speech that I gave at Jack Cruz's recent event here is that money existed before the state. Money existed before the state. Bitcoin separates money from state. Bitcoin kills the state. And when you kill the state and you have and decentralization takes place on a globalized basis, and everyone everywhere is essentially hooked into the Satoshi economy, our sense of well-being transcends materialism completely and utterly. So I would say that there's never a bad day to buy Bitcoin. Buy Bitcoin, hodl Bitcoin, own Bitcoin, and experience the satisfaction that comes with owning Bitcoin, and join the Bitcoin community and start to change the way you think as much as change your wealth status or what you think about your net worth or your economic place in society. Think about your spiritual place in society. The way to enter that realm is by owning Bitcoin, because it carries with it all of those pieces.
Not only does Keiser believe that Bitcoin will continue to rise, but he also believes that it is a necessity in light of the fact that the global economy that is based on a fiat currency is collapsing. The traditional financial system is beginning to break down as a result of the fact that the levels of sovereign debt have reached historic highs, inflation is eating away at savings, and trust in central banks is decreasing. According to Keiser, this breakdown is unavoidable, and Bitcoin is the only alternative that can be considered credible. Bitcoin, in contrast to fiat currencies, which governments are able to print at will, has a supply that is strictly limited and operates independently of any central authority. It is his opinion that Bitcoin is comparable to a contemporary gold standard, but one that is available to everyone and not just to governments and banks. This accessibility is revolutionary because it allows ordinary people to opt out of a broken monetary system and take control of their financial future with an asset that is scarce, incorruptible, and portable. This is the first time in history that anything like this has ever been attempted. According to Keiser, the world of finance is currently going through a generational shift, and Bitcoin is at the center of this shift.
They're all bad, and they all go to zero against Bitcoin, and that's provable. I mean, I've been around since 2010, and I've seen there's over 2 million of these altcoins that have been created, and they've all gone to zero against Bitcoin, some slowly, some quickly. Ether took a while, but now it's collapsing to zero against Bitcoin. Cardano will go to zero against Bitcoin. They all go to zero against Bitcoin. They are all essentially like numbers on a roulette wheel. They have nothing to do with money per se. They're all, to some degree, centralized, either relatively or absolutely, when compared to Bitcoin. So Bitcoin is the only truly decentralized project of any of them. So it's unique in that way. It shares a uniqueness, and that none of these other projects share that uniqueness. They're all like outside the Louvre Museum in Paris. You can buy a Mona Lisa for $5, right? Is it the real Mona Lisa? No. People buy it though, because, you know, they're outside the Louvre. They want to do whatever. It doesn't make it any good, right? So they're just knockoffs, and there's an attempt to recreate the magic of Bitcoin thousands of times, hundreds of thousands of times, and none have been successful.
So are these scams, or do
scams.
people have good intentions
No,
though?
they're scams.
So the people
They're
that
all
make it
scams.
know this.
Definitely. I mean, in the case of, let's say, Ethereum, I mean, they pre-mined something like 70% of the float, and then they just dump it. They're just scamming.Ey're just dumping. They create some media publicity and they dump it. XRP, it's all pre-mined. So Brad Garlinghouse will go, we've got deals, and he'll go on TV, and there'll be a little bump in the price. He dumps it. He's a seller. None of them are buyers. None of them who have created any of these projects are buyers. They've never bought it. They're all sellers. They just sell. They're not, because they're all scams, 100% scams. I can say that unequivocally without any compunction whatsoever. They are 100% scams, have been, always will be, and they should avoid them. There's nothing redeeming about them whatsoever. If you go to Vegas that often, go next time you go to Vegas, go into any of the casinos, and you'll see people sitting at the one-armed bandits, the slot machines, right? And go talk to those people. And every single person you talk to will tell you they get rich playing the slot machine. They're a winner. They make money in doing this. And every single one of those people is lying. 100%. People who say they get rich off shitcoins, either two realities. One, they're lying. Or number two, that is maybe for 20 minutes before they lose it all. Because the mentality of gambling, if they're gambling. So people who gamble are gambleaholics. Like as an alcoholic, there's gambleaholics, there's sexaholics, right? There's an addictive quality. And people who trade shitcoins, I started something called Shitcoiners Anonymous. online. If you're trying to recover from shitcoinery,
I have a few friends.
right? The 12 steps of Shitcoins Anonymous. Step number 1, realize you have a problem with shitcoins, right? Essentially, it's a gambling addiction. And every gambler will tell you, and every drug addict will tell you that they're fine, it's great. They just need one more hit, and they just need lend me some money. I'm just going to get, right? It's a disease, essentially. Shitcoins are a disease like alcoholism or gambleholism. And, right? Okay. So when you meet somebody like that who says that, no, it's like meeting an alcoholic who's begging you for a drink. Just say, look, yeah, I don't want your disease, but there is help. Go seek out Shitcoiners Anonymous, but don't try to save them yourself, because you could be sucked into the disease of shitcoinery. I say that Coinbase in California is not only selling unregistered securities, but they are an unlicensed casino. They are an unlicensed casino. You cannot operate a casino license that's not available in California. Coinbase should move to Nevada and get a proper casino license and operate as a casino, because that's what they are with the shitcoin market. It's just a casino. And they also sell unregistered securities, which are also the problem with all shitcoins, is that they're essentially unregistered securities. Now, there's been some regulatory back and forth on that, and because the SEC, of course, is late to the game, and they try to catch up, and some projects got grandfathered or didn't get grandfathered, but they're all essentially unregistered securities. Ether, even though they, according to the latest SEC mandate or ruling, they're suggesting that they are not an unregistered security. However, as a registered stockbroker myself, who worked on Wall Street for many years as a securities dealer and broker, I can tell you without equivocation that Ether is an unregistered security, as is XRP, as are all shitcoins. You're selling with the expectation of profit, and there's absolutely it doesn't pass the smell test when it comes to the Howey test, which is the test used to determine whether something is a security or not. Then none of them are eligible to be outside of that law. And but they play games and they try to influence regulators, right? I mean, I worked on Wall Street for many years, and the regulators are not hard to lobby, right? They get subject by lobbyists, and laws are created because they get lobbied by banks, right? Wall Street's one of the biggest lobbyist component in Washington, like the pharmaceutical industry, and I know this very well, having worked in the industry myself for many years. Like the biggest, most egregious violation of this was when Citigroup bought Travelers Insurance, because according to Glass-Steagall, which is part of the Securities Act of 33 and 34, you cannot mix a broker and a bank or an insurance company. They're supposed to be separated. But but the Citibank went ahead, Sandy Weil went ahead and bought, and then they retroactively passed a law breaking up Glass-Steagall. Right, Glass.
Okay.
Well, don't talk to Jack. Jack's on that side of the table.
Zionists.
Okay, we don't talk to Jack. Jack's on doing his thing over there. Okay, we're doing my podcast with Elijah.
It's like,
Jack's staying over there.
he's like, you guys get blamed for everything.
I mean,
is it your fault?
Blame. Well, we consumed everything, and we financialized everything, and we ran the prices up incredibly, and we cashed in. Like it was in my year when I entered Wall Street in 1982, it had been in a bear market for 16 years. Guys in the office were working night jobs to make the rent. You couldn't make a living as a stockbroker. And the Dow Jones had tried to get over 1,000 for 16 years. Okay, now it's at 40, 50,000, right, on the Dow Jones. And so we came in the class of 1982. It's my first job out of college, 22 years old. Bull market started almost on that day. And so for 42 years, up until 2022, when the bond market effectively ended the rally, which started under Reagan in 1980. So you had 42 years of a bond bull market. And that's my adult life, was riding the bull market in that very compressed special period of time where I like to say it sometimes, I've never worked for a living. Because when I started on Wall Street, it's like the money spigots just opened up and started flooding Wall Street. And I went from making $6,000 as a proofreader at a rubber stamp factory in 1982. And then my first year on Wall Street, I made the equivalent in current dollars of like 1.2 million bucks. And
annually?
Never looked back.
This was annually.
Yeah.
The traditional hedge against inflation and geopolitical risk has been gold for many years. Gold has served this function. However, Keiser and an increasing number of analysts argue that Bitcoin is not only joining gold in that role, but that it is actively replacing gold in that role. Bitcoin has the advantage in several key areas, including the fact that it is easier to transfer, that it cannot be counterfeited, and that it is not subject to the same manipulation that plagues the gold markets. Both assets have demonstrated resilience in times of economic uncertainty. Recent patterns in Bitcoin's behavior are similar to the long-term cycles that gold has experienced, but Bitcoin is experiencing faster growth and stronger adoption. Particularly noteworthy is the fact that an increasing number of investors are now holding through volatility, which indicates that confidence in Bitcoin's function as a long-term store of value is maturing. Additionally, institutions are entering the market and they are increasingly treating Bitcoin as a neutral reserve asset. This is a role that gold used to play without being challenged. There is a possibility that Bitcoin will not merely share the spotlight of safe haven assets with gold. Rather, it may completely surpass gold and become the foundation of the next monetary era if current trends continue.